Okay, so stage 3 is to reconcile. Arguably the most, I mean, they're all important points, but this is arguably the most important point. This is where we're going to be really digging into the data to make sure that we're satisfied that these numbers are completely accurate. So the first step would be to reconcile the basics. Now, what do I mean by the basics? I would like to think that everybody on this call is reconciling their bank account on a monthly basis, reconciling their credit cards, reconciling their investments if they have those. And I call these the basics because every month you will receive a statement from your financial institution telling you your balance in your bank account, on your credit card, in your investment account. And we can basically just compare what they're telling us to what's in our software. Okay, really basic stuff. That being said, when it comes to bank accounts, things can get a little bit more tricky, particularly if you issue a lot of paper checks to your vendors. Obviously, when we record a check in our accounting software, that's money coming out of our bank account, but your vendor might not have cashed that until later down the line. So it's really important that you scrutinize your bank reconciliations to see if you have any uncleared transactions, maybe significantly uncleared transactions for a long period of time, and understand why that's the case. Have they already cashed it? Did you maybe issue a duplicate check? Did it go to the wrong vendor? Did they receive it? Did they receive it at all? It's important that we kind of scrutinize your bank reconciliations, but making sure that these basics are in place to start with. Reconcile your receivables. So receivables, we should all be on top of our receivables. Receivables is money that is owed to us, be that through people making promises to pledge money to us, be that through the sale of goods, maybe through rental income, all of this. Let's make sure that we're scrutinizing this, reconciling it to make sure it agrees to what we know. So when you're recording your receivables, you should always put in what's known as a due date in your accounting software. That's basically what date are we expecting this money to come in, be that through what the person who pledged the money said they would pledge, or maybe through a contractual agreement that they have to pay by a certain time. Now, by recording this due date, it allows us to run reports in our accounting software, which tells us when this money is overdue. And we can scrutinize our receivables aging report, that is, how overdue is this debt, to determine if we need to take some action here. So there might be something that's ultimately uncollectible. Somebody, for example, might have pledged you $50,000 in two $25,000 checks. We'll record the $50,000 that we're due. We receive the first check, that offsets it. But then what if they can't pay? They write you a letter and say, hey, I'm really sorry, still feeling the effects of the pandemic, X, Y, and Z has happened, I can't give you that extra $25,000. Well, that might be, that's a reason to write that off. So again, scrutinizing our data here would really help us to determine that everything that was pledged to us is accurate and current, and anything that's old and not been collected yet, we can understand why. And also, it's important to note here that you might have a development or a fundraising committee, people who go out and they send emails and they collate the data. Yes, we'll pledge $10,000. Yes, we'll attend, et cetera, et cetera. It's important that if you do have that facility in place, and I do recommend doing it as well, that maybe they can provide you with a list of pledges and donations and money that they expect to receive, and you can cross-check that to your books and records. Reconcile your payables. Again, very, very simple to do. Take a little look, compare year to year. What do we owe to who? Why do we owe it? All that sort of thing. Are there any recurring bills or vendors which we need to record? Maybe it's a timing matter. Just review it year on year just to make sure that what we owe makes sense and is aligned to your understanding. And big ticket income and expenses. Now, reconciliation is a lot simpler to do from a balance sheet or a statement of financial position perspective, because that's kind of a snapshot of where we're at. And we can look at things like bank statements, and we can look at things like our receivables listing and all of that. So when it comes to income and expenses, things can be a little bit more difficult to reconcile. But that being said, consider again, think big picture. What are our big numbers here? Now, payroll and personnel expenses could be a big ticket item. But again, there are some certain reports that you can run from your payroll provider, which can give you a good year-to-date number. You can compare that to what's in your books and records, and that will get you way ahead of the game, because the auditor will definitely be asking you about your payroll reports. And things like grant agreements as well. You can compare, as I said in step one, we can obtain all of these grant agreements that we've got. Maybe you can speak to your development and fundraising committee, and you can compare these grant agreements in aggregate to what's in your books and records. Because again, think big picture. You know your organization, you know what's significant. Make sure that we can quantify it to a certain extent, because I can tell you now, the auditors will be looking. A couple of top tips for you when it comes to the reconciliation process. The first one is opening net assets. The single most important thing that you can do when you're reconciling your books and records is to make sure that your opening net assets number in your financial software agrees to the closing net assets number in your prior year audit report and your financial statements. That is fundamental. If they do not agree, something has happened and we need to investigate there. Okay, I would suggest to you, even on day one of a new fiscal year, make sure that that number agrees to what's in for the previous year or your previous audit report. It's fundamental. I recommend always, once you get an audit report, make sure the books and records in your financial software reconcile to that audit report, and then you close the books, which again, I'll touch on a little bit later on. And again, also break it down. I mentioned it previously, but I work with a lot of my clients and I create what's known as a statement of financial position reconciliation workbook. And that's literally where you run the statement of financial position or non-profit balance sheet, and you deep dive into every single one of those numbers to make sure that you can quantify it and then it makes sense. And again, doing that on a monthly basis makes it so much easier to do. You can identify errors and quicker, and you're not relying on having to review a full year of financial data as part of the audit process. So that's something that I do, something that our team does fantastically well. So we can certainly help if that is of interest.